and Urban Development, Office of Community Planning and Development. Joseph D. Felice, Esquire, Regional Administrator, Region 3, and Special Assistants Philip Traumeter and Elvis Sullivan. So welcome, gentlemen. We appreciate all your time, and I know you guys are swamped in the middle of things, so we appreciate taking time out of your schedule to talk to us today. And with that, I'm going to turn it over first to the SBA. Rob, are you on the call? Rob Goza or Elmo? Having not heard from them, we're going to pivot quickly because I believe Nadab Bynum is on the call. Nadab, are you there?
There we go. I'm here. But,
okay, welcome. How are you?
Hi, how are you doing?
We're doing great. We appreciate the time. So why don't you fill us in on what's going on and what we need to know from HUD?
Sure. Let me just ask to Joe first, if I could. Joe, are you on?
Yeah, I'm on.
Oh, great.
Hey, Joe.
Hey, Mark. How are you?
Thanks for taking the time.
I dressed up for you today.
I love the city backdrop, by the way.
And my father Judge hat.
Yes.
So, all right. So, real quick, I'm going to give a brief overview from kind of a region-wide standpoint, and then Nadab can drill down a little bit further as we get locally. So recently, obviously, a lot of money has since come out of the CARES Act, which is, look, these are tough times. We understand everything's kind of changed, specifically I can imagine for your businesses. Many, if not all, those small businesses have been put on hold for 2 months. For your dining establishments, they've been forced to kind of recreate the way they're doing. Just you having this meeting is ways of recreating. I know for us personally at HUD, we try to get around this region as much as possible. Many of us have been confined to our basements and our dens and our kitchens, or you name it. So this is new territory. I was just out there with you and Kay. I guess it was roughly January, so 3 months ago, and everything seemed bright in front of us, even though it was a miserable day. The rain, not the company. But
thanks, Joe.
No problem. But it's but we've had to readjust the way that we do things. You're readjusting the way that obviously you do things. So some ideas, just to give you some numbers recently that Region 3's looked at, and how that translates into Philadelphia. So $2 billion was allocated to help states, communities, and nonprofits. And the CARES Act, $233 million of that $2 billion has come here to Region 3, which incorporates Pennsylvania, Delaware, Maryland, Virginia, West Virginia, and DC. That money can be used for a myriad of things, to construct medical facilities for testing, acquire a motel or hotel building to expand capacity of hospitals. As you know, Philadelphia, I believe, has acquired portions of both the Holiday Inn and I believe the Fairfield Inn downtown for quarantine units for homeless people. Other money can be used to replace HVAC systems, support business manufacturing, medical supplies, construct group living facilities, carry out job training for healthcare workers, and different kinds of vouchers and the like. Also, $7 million of the $63.7 to help people compromise immune systems. Also, we've gotten into certain cutting levels of red tape, which we'll get into a little bit. Nadab will get in a little bit more to help streamline processes. So that's not. We want our grantees to be able to use this money immediately and not have to wait for it to go through several different processes and the like. So we'll let Nadab a little bit more. A couple more updates. We just announced in the last 2 weeks. And it doesn't directly affect, obviously, Fishtown, but indirectly it will. $30 million in a HUD Choice Neighborhood Grant to Philadelphia. Only 4 cities were chosen nationwide: Philadelphia, Fort Worth, Texas, Winston-Salem, and Los Angeles. It's a highly competitive grant. Philadelphia has the honor, I think, of being only 2 cities in the country that have received this award twice. The first award was for Norris Apartments at roughly 11th and Master. This is now on the other side of Broad Street in the Sharswood Brewery Town area. $30 million that has generated roughly $240 million in private investment. to the city of Philadelphia. Also, last week we announced 23 million additional dollars for the Philadelphia Housing Authority for certain things that have come up. Philadelphia receives an allocation each year of roughly, and Nate, I will give you the better numbers, $30 million in CDBG funding. The CARES Act has since allocated an additional $30 million. So if you take that 30, 30, 30, and 23, literally in the last 2 months, we're somewhere at around $110, $115 million allocated to the city of Philadelphia, some of which is normal money to CDBG, but the additional 23 for the Housing Authority, the additional 30 million in the Choice Neighborhood Implementation Grant, and the additional 30 in the CARES Act funding, because I think it helps plug budget gaps and the like. But with that, I want to kind of turn it over to Nadab so he can get a little bit more down in the weeds to see, what kind of money is coming to Philadelphia and how it all flows. So just so everyone's aware, it flows through our grantee. Our grantee would be either the COC or the city of Philadelphia, and grantees would apply through the city. So there wouldn't be a situation where any of your business owners would go directly to HUD. They would go through the city as a sub-grantee, similar to the way that you've received CDBG funding in the past. When we were out in Fishtown, we talked about CDBG funding. Nadab oversees that, whether that's for storefront improvement, for corridor managers. That's what we had traditionally funded in the city of Philadelphia, specifically along commercial corridors, 52nd Street, Frankfurt Avenue, and the like. So Nadab?
Thank you, Joe.
Hey, Joe.
Yeah.
Joe, thank you very much for that great intro, because really, as Joe indicated, the bottom line is we just have a lot of resources that are out now. We have the traditional dollars that Joe referred to, traditional community development block grant funds that the city receives every year. And the way the CARES Act is written, or the way we're attacking the issues associated with COVID-19, is that we're allowing the city to go back and tap some of those $19 fiscal year 2019 and fiscal year 20 dollars to help to address the concerns and issues that have come up. So that means not only are they able to go back to get those dollars for that period 2 years ago, but also in looking at what we received, as Joe said, you're talking about a hefty sum of money. And our job is to provide general oversight for those resources, whether it be a COVID or whether it be just a traditional dollars. Our job is to make sure that those dollars are being spent properly. But more importantly, our job is to make sure that we are providing assistance to the city to make sure it has what it needs in order to get those resources to you, the citizens of Philadelphia. So over the last several weeks, or a few weeks that we've been working remotely, we've been working diligently to get those resources out to our communities. But before we could do that, it was important, after the CARES Act was released, that HUD sit down and look and see what can we do to streamline this process? What could we do to cut down the time necessary to process these resources? And I will say that a concerted effort has been made to really work with the grantees in reducing that time by exercising a series of waivers designed to allow for the greater use of dollars beyond the normal percentages that have been established for the program in the past, to waive the requirements with regards to how amendments are being done or modifications are being done to tap those 19 and 20-year resources. So there's been a series of actions that have taken place to really help to expedite the process, and we've been working closely with the city of Philadelphia to make sure that they understood fully what these changes entail and how they can pass that benefit on to you. Because less having the money, the kinds of modifications, changes that are needed or to address the COVID-19 situation just cannot occur. So what we have been doing, as I said, is just going through, making sure that we've got the necessary provisions in place to lessen that workload. But there are also other things that we just want to make sure that we share with you. There are concerns with regards to the COVID dollars with regards to duplication of services. There's a real important piece tied to our particular program that says that we cannot use our existing funds for the duplication of other federal resources that can be used. And I don't want to sound bureaucratic because clearly that's not it. There are resources out there that could help, and we want to see that they are being maximized, and then we'll come in and we will fill in. The guidance for how we actually do that is being developed, and it's going to be issued through a NOFA that's going to come out, or excuse me, a notice that will describe to the city how we avoid that duplication in service. But I just want to share that with you because I don't want you to be misled to think that we're delaying the process, but we're simply making sure that we maximize the use of the dollars in our communities. So again, I just want to leave you with saying that we are recognizing and fully aware that there's a need for those resources, given all we've gone through. We've got programs out there that can be tapped, and we'll do everything we can do in order to make those resources available. And yet, as we go through it, we need to be careful to make sure that we are mindful of the necessary issues, such as the duplication of service that we want to avoid. But that said, we are doing everything we can to get even those dollars out to our communities as quickly as possible.
Thank you, Native. I appreciate it. And if you can hang on a
Sure,
little
you're
bit,
more than
we'll try to
welcome.
get to some questions at the end if we're okay.
Sure,
Thank you.
you're welcome.
Now we want to go back to the Small Business Administration, and I know Rob Gozda is on the call. Rob, are you there? We may have to unmute you.
I'm here. Can you hear me now?
I can hear you great. Thanks so much. And we appreciate you taking the time to sort of give us an update of what's going on with the SBA and how it's affecting our commercial corridor.
Well, thanks so much. It's a pleasure to virtually be with you all here today. I still, even after all of this time in shelter in place, I have never been able to get my government laptop video camera to work. So I apologize for the fact that all you see is a gray screen with my initials and last name. But if you'd like, I can even share a screen and do some slides on the Paycheck Protection Program and the the Disaster Assistance Loan Program that we've got going right now as well.
That would be great, Rob. Thank you.
Okay, so just to start off, I think it's important to know that SBA is here for small businesses. My agency recognizes that small businesses are the drivers of innovation and competitiveness, and we all know that they're the key to continued growth and prosperity. And that means that this is a particularly serious time. My agency is going to continue to do all that we can to support small business. To that end, SBA is part of a combined federal response. Obviously, our partners at HUD who are present today, but the entire federal government is responding to this national emergency as effectively and efficiently as possible. We've also been working with our counterparts at the state and local level. What that means for SBA's efforts is that in times of disaster, our mission to empower small businesses is probably as important as it ever is. It's always important, but during this time in particular. And one thing I want everybody to know is that SBA's regular programs are still there. So the 7A and 504 loan programs are still there. All of the things that SBA normally does, we're now doing mostly virtually. So if you need assistance from our resource partners like SCORE or the Small Business Development Center or the Women's Business Center, they're all still there. They're just doing all of that technical assistance virtually. And I think it's also important to understand that we're implementing some of the largest programs my agency's ever undertaken. We're still rolling out policies and procedures, so some of this, but even what you hear today may still be subject to some change. But this is a rapidly changing situation. SBA is working as fast as we can to get all of this stuff out and on the street. So some of the things that aren't related to the PPP and the EIDL program that you should probably keep in mind. So in addition to the injury disaster loan and the loan advance that I'm going to talk about, currently there's a small business debt relief program, which saying that 5 times fast is kind of a challenge. So if you need help with payments on a current or potential SBA loan, lenders are deferring payments for 6 months. There's also the SBA Express Bridge loan, where you can access up to $25,000 with a minimalist amount of paperwork. minimalist, at least for the federal government. Small businesses that have a relationship with an SBA Express lender may be able to apply for a term loan that they can use to bridge the gap, even if what you need is to bridge the gap while you're applying for an economic injury disaster loan. And then, of course, the folks here at the district office are always here for you. So if there's anything that I can do, obviously, just give me a shout. So with that, I'm going to go ahead and try and share my screen. This works really well. In fact, I can say that every Zoom I've been on until now, I haven't had any technical difficulties. So I think I just got lucky this time. Let's see. There we go. Gotta find the right tab. Okay, so we're just going to kind of go over the two programs that are specifically directed. I'm going to go through these slides fairly quickly. There's a lot of depth to each of these that we could get into, and sometimes I give an overview and people are like, okay, that's all I need to know. Other times I get questions that I'm not even I don't have an answer for, and I have to go back to headquarters and ask them. So with that, since March 17th, every state has been, businesses in all states and territories have been eligible for the economic injury disaster loan. And there's also in place that 1-year deferment on economic injury disaster loans from previous disasters. So if you currently have a disaster loan, there's an automatic deferment of payments for those through until the beginning of 2020. So, and the only thing that you would need to do to take advantage of that is turn off your auto pay if it's auto paying, and then turn it back on December 31st. There's also a 6-month deferment on current 7A 504 microloans, like I mentioned earlier. The status of the EIDL program right now is that it went through its initial funding. It got additional funding through Congress, as did the PPP program. And the process that they're going through for that now is they've started up the process for applications that were already in the queue. They're going through those as fast as they can on a first come, first serve basis. And they got to a point apparently where they were confident enough that there was funding there that they were able to open it to agriculture businesses, which may or may not apply to any of the folks in the Fishtown bid area. So it's open for that, but it hasn't opened fully for all small businesses again. So I would stay tuned to see if that's going to occur. But basically what that means is you have to be a small business or an eligible nonprofit organization. You can get what you can use these loans for is essentially their working capital loans. So even if you're an aquaculture business or you're a nonprofit faith-based organization, all of those folks are eligible for this. Sole props and independent contractors, which is one of the things that will even apply in the PPP program, is that if you're an independent contractor, you apply on your own. The person who generally is the company that you contract with doesn't. So if you file a 1099, you have to apply on your own. How much can you borrow? The loans can go up to $2 million. The terms are basically 3.75% for small businesses, a point lower for nonprofit organizations. The terms for repayment can be up to 30 years. There's no penalty if you repay them early. And you can use them to pay fixed debts, payroll, accounts payable, basically bills that could have been paid if we weren't in the situation we're currently finding ourselves in. These loans aren't intended to replace lost sales or to give you an opportunity to expand, but the idea is that this would carry you through this tough time to get you back to an operational steady state, essentially. Part of that process, and there's a whole list of slides that show like every screen in the application process as part of this briefing. I'm only going to show you the one slide. I'm going to go through them really fast. I'm just going to show you the one slide that as you're going through, you're going to want to check this box that says you want to be considered for an advance. The interesting thing about the advance is the way that it currently works is essentially you can apply for up to $10,000. It's based on a number of employees. So if you have 10 or more employees, you can get $10,000. It goes up to $10,000. If you've already submitted a disaster loan application and that box was not there, you have to go back and reach out to the disaster assistance folks. Generally speaking, this was for the first round. Folks who had applied, they kind of had to update the system, and those folks who didn't have that magic box available to check had to go back in and redo the process so that they could check that box to be considered for the advance. And if you're and anybody who's eligible for an economic injury disaster loan is eligible for the EIDL. And the important thing to remember about the EIDL is that it's a forgiven piece of the loan. In other words, that's the part that you wouldn't have to pay back, which I think is probably the important part for most folks. This just kind of talks about what you can use it for, which we've already gone over. This is the program that you don't go through a bank to apply for. The PPP, you do go through a bank to apply for. You just go to this website, assuming that funding is there and it reopens. It's a very different sort of a thing than most loan programs that I've ever heard of, even government administered ones, except for maybe USDA. There may be some stuff over on the HUD side that kind of resembles it, but in this particular instance, you are applying directly with the government. You go to a website, you fill in the information, and then the funds come directly from the U.S. Treasury. The only time collateral is required is if the loan is more than $25,000. There's no real estate collateral required. There will be a blanket UCC one filed against all of the business's collateral in general, but personal guarantees are only required for loans greater than $200,000. And the purpose of a lot of this is to streamline out as many of the 5 C's as possible so that the loans can be made as quickly as possible, and that folks aren't weeded out of being able to successfully apply for one. They can, again, you can have an existing SBA disaster loan and still qualify for a disaster loan for this particular situation. You just can't consolidate those 2 loans. So if you're ineligible, they'll probably screen you right out, so you don't need to worry about this very much. But just remember that although certain states have allowed marijuana to be legal, the federal government still doesn't view it that way. So that is not something that your business wouldn't be eligible for a disaster loan in that particular instance. The first bullet is no longer even a true statement because, as I said, these things have changed rapidly over time. Generally speaking, though, if your business derives more than 1/3 of its annual gross revenue from legal gambling activity, so say you have a convenience store and 1/3 of your gross revenue is lottery tickets, then that would be problematic for this. They say there are 3 ways to apply. Trust me, there's only the one way at the top. If you send a hard copy via email, it's going to slow the process down. If you send it, it's even slower to send it to a mailing address in Fort Worth as a hard copy. And the process online is so simple that it's easier than filling out a form, believe it or not. You can get help with all of the things necessary to get an EIDL loan through our resource partners. These are folks that SBA funds, the Small Business Development Center at Temple, for example, Philadelphia SCORE, and the Women's Business Enterprise Center East. And if you are on the other side of something, like for instance, I sometimes talk to folks who are across the river from us, over on the New Jersey side, you can look that stuff up and find the one nearest you at those websites. This is the application. As you can see, it's just checking boxes. Whoops, wow, that went by really fast. It's checking boxes. It's filling in some blanks. You're already 3/5 of the way through the process. There's owner information. If you have to add an additional owner, you can do that. Again, it's checking some more boxes, but this red piece at the bottom is the entire part of it that is necessary to be considered for the EIDL advance. You check that box. That's the whole EIDL advance process. It's just part of all of the data collected by going through these screens, this is the only piece of it that would apply. That's the whole, it used to be a whole separate process. Now it's one check mark. That gets us actually through, oh, I guess at the end you have to prove to it you're not a robot. That's the entire short and sweet version of the EIDL program. I'm going to run through the Paycheck Protection Program really quickly, if that's okay.
Please.
All right. So this is a loan offered through participating lenders. Usually that means you would go to your bank, assuming that they are an SBA participating lender. Just about all banks at this point are. I used to not be able to say that, but that certainly has changed as well here recently. This is supposed to provide direct incentive for small business owners to be able to keep their workers on the payroll. So basically the funds are used to pay up to 8 weeks of payroll costs, which includes benefits, and then a part of those funds can also be used to pay interest on mortgages, rent, and utilities. This is also the important part of this, is that if you get a PPP loan and you use at least 75% of it for payroll, the entire loan is forgiven. So it's essentially free money at this point because the federal government has paid for that loan. Forgiveness is based on the employer maintaining or quickly rehiring employees and maintaining salary levels. The one thing that I will say about all of this is that this program is open right now. So while the EIDL program is a, you know, hang on, it might reopen kind of a thing, this is available right now. These are the types of folks who are eligible. So any small business, generally speaking, with 500 or fewer employees, which, I mean, if you've got 499 employees, you're still eligible. It's pretty likely that that's the case. There are some nonprofits, primarily 501c3 and C19 organizations, that are eligible for this. If you're a sole proprietor or you're self-employed, you can file for this. An independent contractor can do this. Unlike the EIDL program, legal gaming enterprises are able to apply for this, and ag enterprises. Again, the list of ineligibles is going to sound awfully familiar. If you are someone if you're like a household employer, you know, you're paying someone for childcare or groundskeeping or, you know, whatever it is, they aren't considered employees under this. Obviously, anything that's illegal at the federal level, which generally speaking, the only thing that's really different at the federal level at this point is marijuana. Applicants or owners that are debtors in a bankruptcy, that's going to be a serious issue for applying for this. However, you also have to be able to certify that, you know, you actually need this funding, which is, if you have adequate sources of liquidity, generally speaking, the idea is that you would not apply for this. And hedge funds and private equity firms are also not eligible. So what happens if you don't follow the 75-25 rule? So if you use the loan amount for anything other than payroll, mortgage interest, rent, and utility payments over the 8 weeks after receiving the loan, that would be a problem. So you have to use the money for the purposes for which it's loaned, just like any loan proceeds. The borrower, if you use less than 75% of the loan amount for payroll, then you're going to owe some money. The borrower is supposed to, if you fail to maintain staff and payroll based on however many folks worked for you on February 15th by June 30th. So to qualify for forgiveness, you just want to keep these things in mind. You have to maintain your full-time employee headcount. Those salaries and wages have to be maintained, and you have until June 30th to get folks back up to those levels. What counts as payroll costs? Sometimes people are surprised pleasantly, sometimes people are surprised not so pleasantly about this, but generally speaking, it seems like a pretty broad definition of payroll to me. So salary, wages, commissions, tips, employee benefits that include vacation time, parental, family, medical, or sick leave. Let's see, if you have to pay someone for separation or dismissal, payments required for the provision of group health care benefits, including insurance premiums, payment of retirement benefits, And if you're a sole prop or an independent contractor, wages, commissions, income, or net earnings from self-employment. Here are the terms of the loan. The maximum loan amount is $10 million. The interest rate is 1%. So even if you end up not getting full forgiveness, or you don't get any forgiveness on this loan, the interest rate on this is 1%. The first payment's deferred for 6 months, but the loan maturity is 2 years. So good interest rate, extremely good interest rate, very short payment term. There are no collateral requirements, there's no personal guarantees required, and there's no borrower or lender fees payable to SBA. And this is open until June 30th, and it is currently funded. So that gets me all the way through those two programs and kind of a general smattering of the other things that are available. And with that, I'll just open it up for questions or whatever you guys would like to ask me about.
Rob, before we get into questions, I think Elmo Rinaldi and Tom Rosamondo are on the call. I didn't know if there was anything they wanted to add as well. So before we get to questions, always like to give our speakers a chance to say hi if they like. Or not. With that, let's open. And I appreciate both the representatives from HUD and SBA taking the time. So this is for you guys. I want to kick off with a question. This is for Rob. Rob, one of the questions that I get a lot from our stakeholders is many have filed for the EIDL loan, filed it timely. How would they follow up to find out the status of their application?
So the only folks who can see what's in the disaster assistance loan queue and what information is there are the folks at disaster assistance. So you would have to reach out to them at their email address, and there's also a phone call center.
Yeah, no, I'm on.
The way that this is going, it's going so fast that sometimes the first notification that you have that they've gotten anything processed is a deposit in your account. So then paperwork follows. Sometimes an email follows, and then paperwork follows. So usually I think the statement in it says like EIDL advance or disaster loan or whatever. Like there's some little note in the check blank there that's the deposit that's supposed to let you know kind of what that is. But I got to be honest, like they're processing all of this stuff as fast as possible. So those things kind of sometimes aren't all together in one bucket. Like, you don't just get the whole thing at once. You get the advance, then you get the disaster loan later. Sometimes folks get notification that they're going to get funds before they get the funds. Sometimes they get the funds and then the notification that they're going to get the funds. So it does kind of, because they're going so fast, sometimes people don't really realize that what's happening until there's a quote unquote mystery deposit in the account that they gave during the application process. But if you've got questions about where in the queue you are, if you have a loan application number, you should be good unless it starts with a 2. If it starts with a 2, you should probably reach out to disaster assistance and reapply.
Thanks. One of our tab members, Ravi, I believe you have a question. If you want to unmute and fire away.
Yep, thanks. Hey, how are you? Thanks for taking the time to do this. I'm sure we all appreciate it. My question is with regards to the PPP loan, do any of our state or local unemployment taxes on employee compensation count towards that 75%, or is it like straight salary?
That's a really good question. I suspect that that anything that you were paying in salary counts as salary. So if that included taxes on things, then you would include that as part of salary payments for payroll. I get a little fuzzy as soon as it becomes the state and local side, because I spend all of my time on the federal side. How that interacts with the federal side, it's complex enough that it's almost like when two different law firms start interpreting things.
Okay, thank you.
Thanks, Rob. Rob, one of the comments, the questions that came up on the chat, and I'm just going to read it. It says, several bars and restaurants won't be able to rehire until they are allowed to reopen, which very well could be after June 30th. Are there any suggestions or programs that could be in place to help them?
So what I would say is, whether you can be open or not, if you apply for the PPP, use that money to pay the employees that you would have been paying during that time.
Got it.
And that will also qualify you for forgiveness, so that you don't have to pay that money back. And you essentially you're able to pay your employees and kind of help keep them afloat. Plus you get about 25% of that you can use for other things related to business expenses.
Right.
This is, can I elaborate on that question, please? Now,
Sure.
if we, obviously a lot of our employees don't want to come back, right? Number one, because of what's going on. We can't hire them anyway, doing to go. So we have like 140 employees. We probably can only hire 20 employees back, right? If we hire 20 employees and use that money for payroll only, right? And pay utility, now we're obviously under the 75% and the 90%, right? What does that put us?
I can barely hear you. It sounds like you're asking.
Let me rephrase my question. Sorry, let me rephrase my question. So let me say it again. We have 140 employees. We can only hire 25 employees back because that's the only, some of them cannot come back to work because they have kids and, their family members, and we don't need more than 25 employees for takeout. So what does that leave us? Like, what do we, if we spend the money on the 25 employees for payroll and pay the utilities, the rent, and we follow all the guidelines, but we'll only use money for 25%. I mean, is that money forgivable?
Sort of. So basically, the way that this works is, it sounds to me, and let me make sure that I've got your question right. You're asking, is a borrower's PPP loan forgiveness still reduced if the borrower laid off employees, tried to rehire them, but the employee declined the offer?
Well, and we can only hire 25 people. Regardless, we only need 25% of our people back.
Okay, so the answer is the loan forgiveness amount will not be reduced if those folks refused to come back to work, essentially. But the way that actually works is, I mean, at the end of the day, the interim final rule SBA came out on this because this is something that's kind of been a, well, what if kind of a scenario. To qualify for this particular exception, the business owner has to have made a good faith written offer of rehire, and the employee's rejection of that offer has to be documented by the small business owner. Then the employees, as well as obviously any employers, should be aware that employees who reject offers of reemployment may also be forfeiting eligibility for continued unemployment compensation. So those are things that.
But and thank you for elaborating this. Kind of knew that, but the question is, do you put everybody on payroll even if they're not working? I mean, we're a restaurant business, right? You only need 10 chefs. I don't need 140 chefs anymore, right? So you hire them and tell them to stay at home and pay them?
Yes, pay them anyway. Even if they can't come in because of the state or local municipality shutting certain types of businesses down because of COVID-19, you should still pay those employees using the proceeds of this loan, as rehire them and pay them at the levels that they were, as long as you've got funds from this loan up to 75% of it.
Okay, here's one more question. If we have money left over, right, can we pay our people to come, like, can we give them like a, what is it you called it?
A bonus.
Like to
or
come.
Hazard pay. A lot of people.
Hazard pay, let's say we have like $10,000 left in there, right? It's a different company, right? Are we allowed to give that money as bonuses or hazard pay or anything like that to our regular employees?
My understanding of that is yes. You can give an employee a bonus. The only time that you're going to run into a problem, I think, is if annually the amount you gave them would have come out to be, if you continued to pay them at that rate, would have been over 100,000.
Right. But here it is, right? You're saying probably, right? And when you say the word probably, we want to help our people. And then we end up giving them the money and then come back and say it's not forgiven. We're already in trouble to begin with, right? So how do we know for sure?
Well, here's the one thing that I can tell you about that for sure. The funding for the PPP loan program has already been allocated by Congress. What that means is Congress expects to pay all of these. They budgeted for paying all of it off, for forgiving all of it. So as long as you're playing by the rules and you're documenting things in a reasonable fashion, and you've used 75% of that loan for payroll, and you follow those caveats about the $100,000 pay cap, I really can't. I cannot imagine a scenario where you've actually played by those rules and you don't get loan forgiveness. And I mean the broad strokes of loan forgiveness. I mean the 75-25 rule and the 100,000 pay cap and things like that.
Right. So
And if we can, Denise, we'll have one more question from you, then I want to open it up from others.
So mine goes on to this. So just say you have these people, who have fear and they're not going to come back, and you pay them, but then you still have a little bit of extra funds and you hire someone. Are you allowed to hire someone who's never been on your payroll before?
Yes, most definitely.
Okay.
Thank you, Rob. Rob, from one of my colleagues, this question came in, and I want to get to some of the ones who raised their hand. The question was, what if restaurants who take the loan can't reopen until October and have to relay people off in June?
Yeah, that's a bridge that we're going to have to cross when we come to it. And if that means that if things continue to be shut down, those are all things that Congress is going to have to address as we go forward and more information becomes available. But for the terms of, this essentially being free money, if you stick to the 75-25 rule, you should be okay. Now, I will caveat that by saying that if you have an idle loan as well, you shouldn't hold money for the same purpose. You shouldn't hold those funds for the same purpose. So the simplest answer to that is use the idle as working capital, use all of the PPP for payroll, generally speaking.
Got it. Lisa, I believe you were raising your hand, and then we'll get to Skip.
Yes, I just wanted to say that what should be recognized in all of this is that if you hire people back and you use these funds to pay payroll, you are losing the funds per FASB and the IRS are being offset to the expense. So you are losing the expense of having this payroll, which means it's additional income, usually to the rate of 30%. So I would be very careful about hiring people back to do nothing, because it's going to cost you 30%, meaning your tax will go up by 30% of the amount of the payroll, the amount of the funds. If you are paying them to actually do work, that's a whole different story. But you really need to factor into the taxability of the funds.
Rob, anything you want to add to that? Lisa is one of our finest accountants, so we trust her. Thank you, Lisa.
That doesn't sound entirely wrong to me. What I would say is that this, are you talking about the payroll taxes, or are you talking about the income?
Okay. So when the funds are forgiven, that becomes a debit to the loan and a credit, which is a reduction in your payroll tax expense. And that reduction in expense will increase your income by the amount of the loan, and that will then be taxable to the IRS, the state, the city, yada, yada, yada. So that's exactly what I'm talking about.
That's a wrinkle. I've been on a lot of calls with a lot of CPAs. None of them have ever raised this. You might have found something completely new.
It's RevProc 20-32. And it was just released about a week ago from the IRS.
Lisa, could you send that to
Okay.
me and I'll be happy to forward it to Rob?
Yes,
We'll
will
Yeah, I'd
learn
appreciate that.
something today.
will do.
I learn something about these programs every single day. And sometimes the thing I learned yesterday is different when I wake up in the morning.
No, we hear you. Thank you. Thanks, Lisa. Skip, you had a question?
You're unmuted. No, came to us. But
Skip, are you there?
There we go. Sorry. Better? You have me now? Yep. Okay. First of all, thanks, Rob, for being here. And I'm going to come up with a series of questions or problems, not unrelated to some of the ones that have been mentioned so far, but I'm going to say them and also say that we realize how fast you guys are running to try and catch up. And so there are a lot of things that are being done without necessarily recognizing the consequences when good faith and good intentions are started. And I think this question that you touched on about further revisions is very much to the point. We filed for a PPP immediately. I actually made the submission, the first one on the night of April 2nd, which was the day before they were initially open. And by 7:30 on the 3rd, Friday the 3rd, my banker told us that there were now further documentation needed. And so we ended up getting that in by the 7th. There have been revisions since we did that, including the ability to look at 12 weeks as a for instance, rather than 12 months. But regardless, in my case, and in many businesses like ours, it's virtually impossible for us for forgivability. There are a variety of reasons. I can go into them, but quickly, commissions entered into it that obviously aren't being into our average monthly numbers. We have an awful lot of casual labor people because we're a seasonal business. And even though there was the revision later in the program after we submitted to look at any 12-week period as opposed to the 12-month period, because of commissions and so forth that come in after we are actually busy, the reduction in my average monthly on the 12-week basis compared to the 12-month basis was approximately 16%, but not nearly enough to make it possible for me to disperse all this money. If I pay people who are not coming in, which pertains a little bit to both Lisa and the earlier questions, for Roland's questions, I have to figure out, I have people who worked in my 12-month review period, I have people who worked 10 shifts. And we asked them to work per shift. I'm in the catering business. We asked them to work per shift. They can say no or they can say yes. And they might work another 5 shifts for me throughout the rest of the year. If I contact them about receiving PPP money, they're going to ask me how much they earn. So I need to figure it out for all of them. And there's maybe 50 of them. And if they say no, I can't maintain my average FTE numbers. So the question then is, so the way we're doing it right now is we're really looking at PPP money as a low-cost loan, which means we're using it mostly for bills that we would have had otherwise, utilities, rent, that kind of thing. We're going to use it minimally for payroll. We do have payroll stuff going on, offices working. We're all but having no revenue at this point relative to normal. And we will end up returning the money before our first payments due in December in order to kill the loan and just live with whatever the percentage is, 1% on what we've actually used. My question is, do you foresee further revisions? And can some of these things be addressed? It seems to me that basically in our case, our average monthly numbers, payroll and FTEs, is so far beyond what we could possibly disperse that it's functionally a 1% 2-year loan, which is fine, but it's not forgivable. And we'd like to be able to disperse money. But is there any opportunity for to be adjusted so the percentage that's used for payroll with some guidelines is basically however much we use of it, and we use it 75-25 or a different guideline, and what we don't use we send back, and that part's forgiven. Because if I disperse, even if I figure out how to pay this casual labor, if I disperse and then it's not forgiven, it's basically a loan from, it's basically a gift from me to these people who've received the money, because now I'm having to pay it back with no income on the other side. So
That's no,
Yep.
that's not the, so it's prorated. So if you use 30% on salaries, you don't pay that portion back. If you pay 50%, that part is forgiven. If you want 100% forgiveness, you have to pay 75% or more of that loan of the proceeds of the loan.
No, understood. But what I'm saying is, if I don't pay 75%, if I don't match that 75%, even if I don't use it's 75% of my loan, not 75% of what I pay it on. If I get $100,000 in my PPP, and I only disperse 50, even
The 50 is forgiven.
The 50 is forgiven.
Yep.
I don't have to, it's not 75% of my loan, it's 75% of what I disperse.
If you want 100% forgiveness of the loan, including the 25% that you use on non-payroll things,
right?
Then you have to have used 75% of the proceeds of the loan for payroll.
That's of the loan.
If you get a $100,000 loan and you spend $30,000 of that on payroll, that's forgiven. The other piece of it is not. So however much you spend on payroll is forgiven up to 75%, and anything after 75% is going to be forgiven anyway.
Okay, so I would say that, having spoken with my CPA, our general manager's mother is an accountant, maybe a CPA as well, and my payroll company, nobody seems to understand that. Which it could be that we're all missing something here, but it could also be that the wording is slightly off, because it appears that that you need to spend 75% of the loan that's dispersed to you, not 75% of whatever you end up dispersing. So
yeah, look, I'm not a CPA, I'm not an attorney. I work for the federal government.
no,
What I can tell you is that is what they're telling.
Yeah, I understand that. But I guess what I'm trying to understand is, actually, maybe this is a more basic point. Some of these questions need definitive answers, and nobody seems to know where to get them. I'm sorry.
Go ahead, Rob.
So the definitive answers are the ones that are coming out of IRS, Treasury, and SBA. I'm not going to tell you that the advice that your CPA is giving you is incorrect. What I would tell you is that I would work very closely with my lender to make sure that I have the documentation necessary. That's what I would do. My understanding.
Yeah, I'm sorry.
And my understanding of this is that if you spend 30%, if you spend 40%, if you spend 50%, that's the portion of the loan that's forgiven. Once you reach 75%, the entire loan will be forgiven.
Okay, so understood. And I have to tell you that I've asked I did not include them in my list of people that I've asked, but I've asked our lender as well. And my lender said, talk to your CPA. So,
who's your lender?
I'm not holding you responsible for my.
Don't rat your lender out. Sorry. Never mind.
I mean, I go back to my opening statement. I understand that everybody is that all of these things, SBA, federal government, these things are all being created quickly in order to help people, and they're complicated, and so there are a lot of ripple effects that are not being considered, or almost can't be considered, until they get out and the gaps or the questions become apparent. But nonetheless, the gaps and questions are there, and that's why we're here, and why it's great that you've met with us.
Rob, if I could jump in and skip, Rob, if I could jump, because I know we're getting close to our end. I don't want to hold everybody up too much longer, but I want to get to Skip's point, because I think it's an important one. Is there a place, whether it's website-wise or otherwise, that maybe more concrete things like what Skip is asking can be found that we can disperse, that maybe the SBA provides?
So both SBA.gov and Treasury.gov have great big banners on the front where you can go and find additional information right from their main web pages. But what I would tell you is that, Skip's right. This is the biggest thing that's happened. I've been working for the federal government for quarter of a century. I'm turning 50 this year. I can honestly say that I've never seen anything like this in my life. The biggest piece of legislation I think I'd ever seen prior to this, which was by far the hugest I'd ever seen, was the Affordable Care Act. And honestly, in terms of speed of rollout, that was phased in over years, and they ran into things and they would encounter those things and they would adjust for those things. This is all happening in real time. When the 2,000 pages of the Affordable Care Act hit the policy and regulation desks of all of the folks at HHS and Department of Labor and IRS, with that resounding thud of 2,000 heavy pages, that was engaged by their policymakers, their attorneys, their counsel, all of those folks. This is not that situation. This is the legislation hit, making that thud, and was enacted at the same time. So you're definitely going to encounter the sorts of things that Skip is talking about, the sorts of things that Lisa is talking about. I'm not up to speed 100% on every wrinkle of this legislation. Honestly, like I said, things change from the day before sometimes because they encounter these issues, you know, and either Treasury or SBA or even Congress in certain instances, like with the additional funding bill, change things to address those issues. What I will say is that my experience of this has been that generally when they encounter something like this, unless it's something egregious, usually what comes down is on the side of the business owner. It's supposed to help them recover and keep their employees paid during this time. And like I said, when the way that the PPP program is working is they literally funded every penny of every loan. That's what they wrote the check for out of Congress. Their expectation is to forgive all of this. They expect to do that. That's what that allocation of funds was for. Now, if someone doesn't follow the intent of the spirit of this in some way, then that's where you'll run into issues. But as long as you're using that money to pay your employees, you should be good.
What if I hold the money? What if I hold the money, right? Here's where we came out, one of our restaurants, the 140 employees. To hire them and then lay them back off in 8 weeks, it just didn't make sense for us to do that. So what if we hold on to the money instead of returning it on May 7th and see if we can use it later on for like for rent, everything, at 1% interest rate.
The way the loan
is fraud.
The way the loan is structured, the terms of the loan are for you to pay them like the clock starts running for 8 weeks from the date of dispersal. You need to pay your employees with that money for it to be forgiven. If what you're looking for instead is a 2-year maturity 1% loan, then hold the money for that.
But I'm saying if I don't pay my employees right away, and I use the money for, you know, for my payroll later on, right? And pay the 1% interest rate. Am I allowed to do that?
If you are willing to pay it back instead of having it forgiven, yes.
So I could use that money. I just want to rephrase it, because we were told that if we don't hire everybody back right away, then we're committing fraud. So you're saying to me, I can reuse that money for pre-opening expense later on and salaries and all this stuff and pay the money back and interest on top of it. I'm allowed to do that.
Basically, if you don't qualify for forgiveness, the loan is a 1% 2-year maturity loan.
So no matter what I use it for, I'm allowed to use it with 1%.
As long as it's business related, yeah. I mean, you can't.
Of course. I'm not going to go buy a house that's short.
Somehow.
Because we were told that if you don't hire people right away, your full force or notify them, that is fraud. But if you're saying to me that I can use that money later on and pay 1% on it, not forgivable, then that's helpful, actually.
That's literally in the terms of the loan document you submitted to the bank. If you really want to know for sure what you're on the hook for, look at the actual document. You can actually go online and see a blank version of the document that you filled out signing up for this loan. It lays out the terms. Those are the terms that applied when you got the loan.
All right, I mean, all my attorneys.
It's only one sheet of paper.
No, I'm glad you said that. We're gonna look at it. I mean, all these attorneys from big firms that are paying $750 an hour told me the opposite.
Yeah, my understanding
Can I
too, Rob,
ask
is if you
where?
use it for business purposes, it can be used. You'd have to repay it, but
Right, can
You
I
can
ask
use it.
where in the loan agreement that it says that? Like, where would I reference that?
what I'll do is we'll help you find that because I want to make sure we go through, but it's actually on the agreement that you sign, right, Rob?
Yep. So if you go, this is a really long website, but it's basically like you can literally look up the PPP borrower application form. It will show you a PDF. The PDF itself is like, the whole document is 4 pages, and the last 2 pages of it are just terms. 1 page is signatures and certifications. And all of the terms of the loan are laid out. There's like a yes, no check block for, eligibility questions. There's yes, no blocks regarding, those sorts of things. And then in the certifications, it basically says, you have to certify the current economic uncertainty makes this loan necessary to support the ongoing operations of the applicant. The funds will be used to retain workers and maintain payroll, or make mortgage interest payments, lease payments, utility payments as specified under the Paycheck Protection Program rule. I mean, it does say, I understand that if the funds are knowingly used for unauthorized purposes, the federal government may hold me legally liable, such as for charges of fraud. But it specifically says business purposes as one of the uses for the proceeds of the loan. The forgiveness hinges on how much of it you use for payroll.
And and thanks, Rob. Randy posted on the Zoom group chat the link to the actual
Yep, there it is.
PDF of the form. Thank
Rob,
you.
can we ask, is there a way you can, again, man, I don't want to go use that money and be in fraud later on. That's what I want to do. Is there a way, please, you can email us, well, which I just asked you that, because we looked at it right now. Denise is looking at it right now. And I just want to make sure that, again, if there's language in there, like you're saying, maybe we're not seeing it, that we can use the money, for not being forgivable, but we can use it, after 8 weeks when we open for pre-opening expenses for the restaurants and everything else.
Okay,
What
so
I
if
can
you,
do, Rob, besides the link, I'm actually in the office next door to Roland and Denise.
No, not just the link. I want to see the language, though. I know. I want to see the
No, but I'm
language.
going to explain it to you.
So if you open that link, it shows you the actual application, and the third certification down that you initialed says that you can use it to maintain payroll, make mortgage interest payments, lease payments, utility payments.
As specified under the rule, and that's what concerns me. The rule basically says.
Now, if you go back to the rule says you have to use it.
It says use of proceeds for
For 8
payroll
weeks.
costs, payments on mortgage interest, rent, blah, 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 at least 75% shall be used for payroll costs, period. It doesn't reference forgiveness there. And then it even says in bold, the use of proceeds listed above must match the use of proceeds.
Which
application.
paragraph are you in? If you tell me that, I can probably answer you better.
So in our agreement, I'm on page 2. Letter E as in Edward, use of proceeds. So I'm just saying, to reiterate, if I look at number 3 in the application, it says the funds will be used to retain further as specified under the Paycheck Protection Program rule. It's my understanding that the rule.
I'm sorry. I'm not seeing. Maybe we're not looking at the same document.
I'm looking at my loan agreement.
I have a suggestion, guys, so we don't. Rob, maybe if you could send me just the specific language of the part you're talking about when we get off.
Thank you.
I will forward that to everybody because I think that will best explain it instead of going back and forth.
We saw what Rob is saying under the third that we initialed it. We saw that.
saw it.
But in there, go back, in there, it says,
As specified.
as specified under the Paycheck Protection Program rule. So
Gotcha.
if you go back, but I'm saying,
we're
if
gonna
you go
answer
back
this
to the
off.
protection, if you go back to that rule, right? The rule says that what we've been talking about, you have to do it prior to, during that 8 weeks.
And that, I think, is
listen,
a question all of us have. Based on what Skip said, we're all in the same boat.
Well, as people are hopping off, and I don't want to go, we've been on for over an hour. If, Rob, you could send me any language that I can send to everybody, that will make it, I think, simpler from my reading of what Rob said. I agree with that, and that's my understanding of it. But I think if we can do that, this will make it easier for everybody else on the call. Skip, you had one last thing that I think we're going to call it a day here.
Thank you, Mark. I appreciate it. Rob, just a quick question. I understand the distinction between that if I use 30% of my, if I do not use the entirety of my loan, but the portion of it that I use is for payroll, whatever portion I use for payroll is forgivable, still subject to my lender. However, if I don't use the full amount, I can't maintain my FTEs. So is that at my lender's discretion as to whether that's forgivable at that point? Because I'm clearly not going to conform to that requirement if I'm using less than 100% of my loan.
If you, in order to maintain payroll for that, it requires 100% of the loan proceeds, and that's what you should use it for if you want it to be forgiven, because you have to maintain that level of FTE.
Right. So it's, but that makes it impossible. So therefore, I can't use less than the full amount of my loan, even in its entirety for payroll. I get $100,000. I only use 30. I use it entirely for payroll, but it clearly doesn't match my FTEs at that point. Therefore, that won't be forgiven.
I guess I'm having trouble following. So the condition is you get $100,000 loan. You use 30,000 of it for payroll.
Correct.
That portion is forgiven.
But
the other 70.
Even if it doesn't match, even if I don't maintain my FTEs.
Right. So in order to get 100% forgiveness,
right,
you have to have 75% or greater. You don't have that. You only 30% of the loan.
That part I get. But what I'm saying is I'm conforming to only using it for payroll, but I'm not conforming to this other metric of I have to maintain my FTEs. And you're saying that is also functionally scalable according to that will not affect the forgiveness. Basically, what I'm trying to understand is, look, what I understand now, I can use 30,000. The 30,000 is forgivable, not 100, but the entire loan is not forgivable. But what I'm saying is, if I don't maintain my FTEs, is that 30,000 still forgivable?
The portion of the loan that's used for payroll is forgivable.
Okay. Okay. Thanks.
Thank you, everybody. Thank you, Skip. Guys, this was a wonderful call. Rob, I appreciate your patience, and I know this is confusing for all of us, so I really appreciate it. And certainly any information you can send as a follow-up for me to get to all of our stakeholders will be helpful. Obviously, you could see, which is a great thing, that everybody wants to follow the letter of the law, which we like. So again, I want to thank all the representatives from HUD and SBA for being part of this. This is certainly very informative for everybody. If should any of you have had questions that we couldn't get a chance to answer, please email me at mark@fishtownbid.org, and we'll try to get you those answers. So I want to thank everybody for a very informative session, and I appreciate the time. As I close, I want to remind everybody, Friday, the Fishtown District is having another virtual stakeholders meeting at 10 a.m. We sent the link out. This is about the new construction procedures and regulations under COVID-19. We'll have L&I Commissioner David Perry, as well as Michael Shore from the Department of Community and Economic Development from Pennsylvania. So I hope you'll join us. Thanks, guys. I appreciate it. It was a great call.
Thank you, Mark.